Hey guys, welcome back. In today's video, we are talking about why the shorts are scared, the AMC high priorities, how the shorts were exposed, and many more in this video. First, we're taking a look at this. AMC at 275 and is down 4.67%. Why? Cinemark is at 27.17 and only down 0.39%. Why? It makes zero sense unless they are scared to death about AMC being naked short tens of billions of shares at least. So when we take a look at this, we obviously firstly understand that AMC and Cinemark are obviously both within the same industry. And so if one stock were to go down, it wouldn't be surprising to see the other stock go down along with it because they are affected worldwide in terms of they're both in the same industry. However, the thing that's unusual about this is the percentage in which they are down. The fact that AMC is down 4.67% while Cinemark is only down 0.39%, that should already show you the clear difference between the two, that something is going on. Now, when you take a look at institutional ownership, for AMC, you're looking at a very low percentage, at least for the real shares. We know that the retail owns at least 90 to 95%. For Cinemark, what you will see is that institutional ownership, not only is it at 100, but it's also above 100 at 120. So that's not only the majority, but also at 120% ownership. And so this is the reason for why we are seeing the difference in drop between AMC and Cinemark. Firstly, for AMC, there are, of course, billions and billions of synthetic shares, and they are also creating, synthetic shares every single day. Wherever that's millions, hundreds of millions, or even billions every single day, they are creating synthetic shares. And also, it's because they don't want the institutions to lose money, they want the retail to lose money, and vice versa. They don't want the retail to gain money, they want institutions to gain money. And it's why we see that when the industry stocks within the theater stocks go down, we're seeing AMC down at a way larger percentage than Cinemark because of the manipulation and just how worried these institutions are. You can even see it from here, and you can compare the dark pool, but you can just see how they are obviously affecting AMC. When you take a look at yesterday, 76 million in terms of dark pool usage, 26 million shares being hidden away. Then when you take a look at today, 75% and another 26.4 million shares are also going into the dark pool, into the off exchange. So every day, and we've known this for a long time now as well, is that the majority of these trades, they're going to the dark pool. But the majority of these trades in the dark pool are also buy orders. And so we know that trades that go into the dark pool would have no effect on price. And so the fact that the majority of these trades are also buy orders would mean that a lot of things that would positively affect the price of AMC is also not going through. This is something we've always mentioned and we talk about all the time, is to highlight just how much manipulation is going on in the market. And that's what we are seeing here. And so when you want to understand why AMC is not experiencing, when you're seeing theater stocks goes up, why does AMC not go up along with it? Take a look at the dark pool. When you're seeing AMC stocks along with all these other theater industry stocks going down, why is AMC down the most? And once again, it's because the majority of the orders that are having an effect on the price are sell orders that get routed into the NYSE. The big orders, the orders that would typically push the price up of a stock, are then being hidden away in the dark pool, and is what we're seeing here. And so we've always said this with AMC. You shouldn't judge AMC's performance by its stock price. The reason why I say that is because normally when you see a stock price going up and up and up, you obviously would think that that stock is doing well, hence why the stock price is going up. But for AMC, that is not the case because we never get to see what real sentiment is for AMC. The sentiment could be bullish, but you're still seeing the price go down because the orders are being hidden away. And the very way that we look at how AMC is performing is by looking at the manipulation and suppression that is going on. Because if there is a need to suppress and manipulate AMC, it would show that AMC is doing things that will normally allow them to go up. And that's why the shorts feel the need to obviously suppress the price. And that's how we judge the success. And so if right now what we are seeing is a large amount of volume are being hidden away, are being taken away, and that it's really a lot of suppression and manipulation, then it just shows how well AMC is doing. And you can also see how Adam Aaron wants to progress later on. 3 of my highest innovation priorities for AMC in the year 2026. more PLFs, the premium large format screens, up our use of AI and technology to become a more efficient company and to dazzle our guests in theaters. After years of fits and starts, secure the rights to show professional and college sporting events. So this is how we're looking at in terms of how AMC is obviously going to expand. Now, we've already seen how more premium screens is allowing AMC to grow. We've seen the increase in revenue. We've seen the increase in profit. The next thing is to talk about the use of AI and technology. One of the examples we've given in the past before is essentially how we're seeing AI that has improved and enhanced the dubbing of foreign films. So when it's a film that's done in a language that's not English or any other language, it could then get translated, and it's vice versa. So it could get translated to that respected language or from that respected language to English. And so this is something that will definitely allow, more people to go watch more movies. It will encourage more people to watch more movies. And so it's also just one of the things I've mentioned. There are, of course, a lot more potential out there. And then, of course, the right to show professional and college sporting events, that should already be something, that we could understand why it would do well, especially if it's able to show these games that are attracting mass viewers. And so this is how we're understanding that AMC, not only are they the biggest theater company in the world, whenever they do things, they're going to do things at a 10x, at a 20x, and that will greatly increase their revenue, and is why the shorts are worried, because they see that AMC is doing things that's allowing them to grow, and they can't do anything to stop it. Now, let's take a look at the biggest exposed today, and why we know that the short sellers are not only doing the same thing, but why they're worried. So for BYND, Beyond Meat, is something we talked about. And today, Beyond Meat was actually met with a halt. Classic example how the weaponized LULD is used by Kenny and his band of criminals to protect themselves. Just when BYND was about to melt their faces to $10 plus, they halt, move stocks internally, and attack. And so Beyond Meat, and many of you will be familiar with this because it's what happened to AMC, it's what happened to GME. Beyond Meat, as it went up over 100% today, it was then met with a halt. And then instantly, the price went down after it resumed. Sounds familiar? That's because it's what happened with AMC and GME. And that's what we are looking at right now. And typically, we know with these holds, they're done by the same people. So we know the firms that could are possibly involved. You can see here, why do we even have to ask these questions? Such an obvious conflict of interest, but someone in power allowed it. Because when you take a look at the LULD chair / advisory, you're looking at some people. So you can see the advisory committee, you have some people that we've known, Citadel Securities and Jane Street. And so people we know that are familiar that in terms of are constantly in the shadows and lurking to short, of course, certain stocks. And so it wouldn't be a surprising fact to know that they are obviously behind this. And this is what we've said with when short firms take these trades and then they see it go extremely bad against them, they start to use these tactics like the halt. And it's what we've seen with AMC and GME. And so you should understand by now the kind of manipulation that they are exploiting. You can also see Beyond Meat is on track to trade 10 times their public float with 0 shares available to borrow. This is another statistical impossibility in a fraudulent market. And so this is just to understand in terms of what was going on. You can see that when a float, and this is when Beyond Meat was $1, and we saw it go all the way to $7 today. And so this is to understand when a stock is traded, so way above their float, whether it's 10 times, 100 times above their float, you're going to see it explode. And that's the typical behavior. We've seen it with AMC, we've seen it with GME, we've seen it with Beyond Meat as well. But then the thing that comes off that is obviously how the shorts are then trying to protect themselves by exploiting things that they shouldn't be able to, such as the halts like we've talked about. You have to understand, retail doesn't move markets, institutional do. Float is 69.2 million shares, but yet we saw 230 million shares traded by 6:30 a.m. on Wednesday, October 22nd, and the media wants you to believe this is retail. And so this is the biggest thing. They always are trying to divert your attention, because we have to understand is that, yes, what we are seeing with Beyond Meat is, of course, a short squeeze. However, it is nowhere near the scale where AMC and GME will have. But they're trying to stray you away from it. You can see here, forget GameStop, meme stock traders are now pumping Beyond Meat. Here's why. Now, this is clearly not the case. Now, this isn't me telling you that you shouldn't do anything about Beyond Meat. Like I said, if you've done your due diligence and you want to deal with it, feel free to do so. What I am saying is that there is no way people have bought for the last 4 or 5 years AMC shares single daily, weekly, monthly, yearly, and then suddenly they see Beyond Meat short squeezing and then sell their shares and then go into to Beyond Meat. No one from the AMC community is doing that. No one from the GME community is doing that. And right now, a lot of the volume are done by institutions as opposed to retail. So don't believe what the media is obviously saying. As always, this is financial advice. So do take what I say with salt. Make sure you do your own due diligence and research. And I'll catch you guys next time.